catalyst for the conversation is last week's multi-billion-dollar write-downs at Warner Brothers Discovery and Paramount. Joining us right now to discuss all of this and the pressures on everybody and the strategies of the various players. Puck founding partner Matt Belloni is here. Matt, it's great to see you, sir.
You too.
I want to start with Warner Brothers Discovery because we had Rich Greenfield on last week. There was a lot of speculation about, now that this NBA deal is, in litigation, what ultimately happens to Warner Brothers, what happens to TNT, and most especially what happens to the carriage fee. And right now it appears that most analysts and investors are believing that Warner Brothers Discovery is not going to get as much as they used to get and maybe get a lot less for it. It's something that you've written a lot about. But at the same time, I was drilling down into some of this, thinking to myself, they have more, and they would say this, they have more sports content on that channel than they had at the beginning of that contract. And when it comes to a ratings perspective, it actually is unclear whether the NBA was holding it up or, frankly, all of these other sports are holding it up. So I do wonder whether it is overdone or not and what you're hearing.
Well, that's the bet the company question right now, is whether the lack of NBA is going to cause the carriage fees to go down, or whether they've been bulking up lately on lesser sports that they believe could be a replacement here. And there's a big carriage coming up with Comcast. And Comcast, remember, is the bidder that won the NBA. So clearly Comcast believes that taking the NBA away from Warner Discovery for its NBC properties is going to allow it to put the squeeze on them and get a lower carriage fee for those channels. That nobody knows what's going to happen there. And I think that that's going to be a big indicator of where this stock goes, because right now the investment community has pretty low confidence in Warner Discovery's ability to maintain that carriage fee. And I would probably agree with them. I mean, necessarily it has to go down at least a little bit.
Well, but that's the question. I mean, I think that is the fundamental question. You look at the stock now at $7 a share. That's the question. If they get the same fee or more, and I imagine they're going to go in, by the way, asking for more. They're not going to go and asking even for the same fee.
They always ask for more.
Always ask for more. Can they hold the line? And does Comcast ultimately, and parent company of this network, do they cave to that? Do they look at the ratings? You're also going to have, I think, you got college football, you got March Madness, and all these other things that are going to be coming later in the game, right near these contract negotiations. Does it get really tricky, when those ads start going on TV saying, call your cable provider to keep us on the air? I mean, how persuasive does that stuff become?
I think it is persuasive. In the history of the television business, it has always been very persuasive that the channel owner typically wins because they have that relationship with the consumer via putting the ads out there and telling everybody, if you love CNN, you're not going to get CNN. I think CNN is a big one here. It's owned by Warner Discovery. It's part of this package. And they could say, what happens if another, major news event happens? You want to at least have CNN. And the question is how much Comcast is willing to let all that go. And the history of the television business has been that they have not been willing to let that go. But we are in a brave new world of television right now where all these companies are much more focused on their digital offerings. Comcast has Peacock and the others have their own thing. And maybe they're willing to say, listen, guys, we're not going to give you $3 for a channel that does not have premium sports. You might have March Madness, you might have college football. That's replaceable. You don't have this NBA content that people love. So why should we pay you $3 when something like USA gets 50 cents or 75 cents? There's got to be a come down there. And the entirety of this company is based on that $3 price. If it comes down to $2, comes down to $1.50, that is disastrous for that company.
Let me ask you a separate question. You probably saw Peter Kafka over at Business Insider over the weekend making an argument, if you will, in a piece suggesting that Apple should buy Warner Brothers Discovery. I'm not sure if regulators under a Trump or Harris administration would allow it. But the bigger question I'd ask you is whether you think that's something that Apple would want to do.
Everybody floats Apple should buy this. Apple should buy that. I mean, this has been happening for 6-7 years in entertainment since they launched their streaming service. They've never shown any interest in any of these major acquisitions. Yes, they bought Beats for $3 billion or whatever it was. That has proven to be an outlier. And over, Apple has said, we are building our entertainment assets on our own. Would they benefit from HBO? Absolutely. They expressed interest in HBO in the mid-2000s, but they only wanted HBO. They didn't want any of the television networks along with it. Those TV networks still exist, by the way, and would come along with HBO if they were to buy that. And I still think it's wishful thinking to think that Apple's going to come in here and be a white knight if the government would even let them do it.
Right. And Matt, just in terms of the business big picture as it stands right now, and maybe you can actually do a glass half full when you say multiple streaming players are at least near, if not at, break even or profitability. Box office, I mean, has it been a pleasant surprise in the last couple of months, perhaps? And everyone was sort of saying you had to fight through this year after the strikes to get to a point where you might have a fuller slate and maybe a little more to sell. Is it a stretch to say that things are looking less bad?
I don't think that's a stretch. I think things are looking less bad. But when you talk about streaming, getting to profitability does not mean that these streaming businesses are replacing the TV cable bundle. I mean, the chasm there between the money that these streaming services are making and the money that is dwindling in the television business is just not even close, unless you're Netflix, of course. Netflix has figured out streaming and is generating billions of dollars in profit. The others, yay, they got to streaming, some of them earlier than expected, but this is not television, and they know it.